One of the best things you can do as a trader or an investor is to detect what state is the market currently in. Instead of trying to predict the future, you can act depending on the current information you have in hand. This is one of the first strategies Jim Simons and his colleague Baum-Welch used with the algorithm Welch developed, called Baum-Welch algorithm. Using this algorithm, they detected that the market goes into 8 different states and they had no clue why the market does that. As a retail investor, you can use such snippets of information from real professionals and act accordingly. The core of your investment trading thesis should always be prudent and proven. Thus, most of the time, you will want to be a good value investor. Value investing is not buying the lowest PE stock in the market, but it rather is about identifying the true value of a business. The best value is provided by the best growth companies that have consistent growth and ideally are profitable at some point. In this video, we will go over Tencent Holdings Limited or ADR with the ticker symbol TCEHY. Before we begin, I am not a financial advisor. Nothing in this video represents financial advice. This video is rather my own opinions on the market and TCEHY ticker symbol. TCEHY is the ticker symbol for the American Depository Receipt, ADR, of Tencent Holdings Limited on the OTC over-the-counter market in the United States. An American Depository Receipt, ADR, is a negotiable certificate issued by a U.S. bank representing a specified number of shares or one share in a foreign corporation that is traded on a U.S. exchange. ADRs are a way for U.S. investors to own shares in foreign companies without the need to deal with the complexities and risks of foreign markets and foreign currencies. They offer the convenience of trading and ownership in the U.S. market and in U.S. dollars. One thing investors should be aware of is that while ADRs offer a convenient way to own foreign shares, they also carry some risks. These include exchange rate risk, since the underlying shares are denominated in a foreign currency, as well as the political and economic risks associated with the foreign country. In addition, dividend payments can be subject to foreign taxes, and the ADR issuer can charge fees for managing the ADRs. It's also important to note that ADRs listed on the OTC markets, like TCEHY, can be less liquid and more volatile than those listed on a major exchange, like BABA on the NYSE. To list on the NYSE, companies must meet strict financial, regulatory, and governance standards. They have to register their securities with the U.S. Securities and Exchange Commission, SEC, which requires extensive disclosure of financial details and corporate governance practices. This means higher costs and increased regulatory scrutiny, which some companies may prefer to avoid. In contrast, companies trading OTC over-the-counter can avoid many of the regulatory and financial requirements of a major exchange listing. It is less expensive and involves less regulatory oversight, but the trade-off, as we mentioned, is that these securities can be riskier. Now that the technical parts of the ticker TCEHY are out of the way, we can focus on the business itself and why I think it is a great risk-reward investment as long as monitored closely. Tencent is a major multinational conglomerate based in China, with subsidiaries in various internet-related fields and technologies including social networks, music, web portals, e-commerce, mobile games, and more. Some examples are WeChat, Weixin. Tencent's flagship social media platform is a multi-purpose app where users can chat, post updates, share photos, make payments, book appointments, play games, and even hail rides. WeChat is one of the most popular social apps in China. QQ is an instant messaging software service and web portal developed by Tencent. It offers a variety of services, including online social games, music, shopping, movies, and group and voice chat. Tencent Games. This is the video gaming division, responsible for the creation of some of the top-grossing and most popular games in the world, including Honor of Kings, also known as Arena of Valor internationally, and PUBG Mobile. Tencent also owns Riot Games, the company behind League of Legends, and has stakes in other gaming companies like Epic Games, the creator of Fortnite. Tencent Music Entertainment. This is the leading online music entertainment platform in China, operating 4 highly popular music apps: QQ Music, Kugu Music, Kuo Music, and Weezing, Tencent Cloud. Tencent's cloud computing division provides cloud services such as data storage, computing, and CDN services, big data analytics, artificial intelligence, and more. JD.com. Tencent owns a significant minority stake in JD.com, one of China's largest e-commerce platforms. as part of its strategy to bolster its e-commerce business. WeBank. Launched by Tencent, WeBank is China's first online-only bank. It offers financial services such as loans and deposits mostly through mobile applications. Tencent Video. Tencent's video streaming service is one of the largest in China, offering a wide variety of TV series, movies, variety shows, animations, and other video content. These are just a few examples. Tencent's portfolio is broad and diverse, extending into areas like artificial intelligence, education, health, and transportation. The company's approach is to build an integrated ecosystem where services are interconnected and mutually reinforcing, creating value for its users and partners. I usually would prefer to have an understanding of the macro environment before I make a long-term investment. With Chinese stocks, however, this is especially harder, as evidently many big investors and hedge funds have been very wrong in their predictions for China so far. With the government crackdown on its tech giants, partially self-induced recession, with the already tumbling housing situation, consumers seem very hesitant with their economic activities. There are arguments for both bulls and bears in the long term for China. Some predict China will soon go into a population growth crisis followed by a long-term recession while favoring the Indian markets for growth. Regardless, I also remember when people were discussing how bad the COVID-19 crisis was and how the oil will never go up again. Thus, in this investment thesis, I wanted to avoid macro as much as possible, as it is very hard to understand and compute all variables, and even then, you can get it wrong with China. Similar to many other Chinese stocks, Tencent stock crashed very hard during the government crackdown and recovered 84% from the 2022 lows. Yet it still historically looks attractive. Firstly, Tencent stock roughly averaged 22% annual returns over the last decade, including the crackdown crash, which helps us make the base case for estimating the future annual returns relatively on the safer side. Despite this huge outperformance against S&P 500, which averaged roughly 12% in the same time period, Tencent stock is currently down 53% from its all-time highs. Here are some of the most important fundamentals visualized using this beautiful Koifin chart. As we can see, on December 31st, 2021, the earnings of the company peaked and its revenue plateaued, which lead to the poor performance of the stock price over the following calendar months. With the third quarter annual report of 2022, earnings seem to have put a bottom, and both revenues and earnings seem slightly to be edging up. This did affect the 5-year compounded annual growth rate of revenue and reduced it from 29% to 18.46%, which is still good, but ideally it needs to improve. With such a backdrop, ratios such as price-to-earnings ratio and price-to-free cash flow ratios bottomed in Q3 2022. Currently, the PE ratio sits around 16.1, which is roughly 70% lower than the last decade's average PE of 39.12. Similarly, the price-to-free cash flow sits around 19.4%, which is roughly 40% less than the decade's average of 30. During this downturn, firm management seems to be acting very prudent. The firm grew its debt, but it also grew its cash and short-term investments, which almost covers up all of the firm's total debt. Thus, the firm looks financially healthy. Although the stock-based compensation keeps growing, it doesn't seem out of the ordinary, especially considering the fact that the dividends of the firm are still growing at a decent rate and diluted weighted average shares outstanding have been falling since Q3 2021. I especially like Tencent stock because of its dividend growth on top of all the fundamentals and the China play vector. Here we can see some insane compounded annual growth rates for 3, 5, and 10 dividend growth. Although I would love these numbers to reflect the future dividend growth for Tencent stock, these are spiked numbers because these were the results of a special dividend distribution, which were the proceeds of Tencent's divestment of Meituan stake that was believed to be related to the crackdowns on conglomerates. Despite the spiked dividend growth numbers, real numbers are almost as exciting. If we were to calculate the 3, 5, and 10-year CAGRs pre-2020, we would have the following rates: 20.5% for 3 years, 28.47% for the 5-year, and 34.95% for the 10 years. With the numbers we have, we can make modest scenario investment calculations. Here, we assume a 10-year of holding period for our Tencent stock. Our starting position size is $10,000, ignore the share price. The current forward dividend yield is around 0.7% and will be paid quarterly. Assume that we reinvest all the dividends. For a mid-case scenario, we will be assuming a 22% of annual dividend growth as well as 15% of average annual stock returns for 10 years. As a result, we get 39.63% average annual returns on our investment, which is absolutely huge for any portfolio. You can tweak all these numbers as you like and fine-tune your realistic scenario. In conclusion, I find Tencent Stock to be a very attractive risk-reward play. Considering the macro headwinds that are and aren't specific to China, this play should be monitored closely and might be reconsidered in light of future macro developments. Note that while I was making this video, Tencent stock ripped up by more than 5%. With the strong S&P 500 and weak DXY, one might consider DCEHYing slowly into this position by risking more price appreciation in the short term. Again, nothing in this video is financial advice. These are just my thoughts on the Tencent stock and reasons I like it for my own portfolio. Thank you for watching. Peace.